Last week we talked about a potential drop in gold, and I told you very specifically that you can in fact try to sell at highs at around 1800 1780 zone, which is going to be a good resistance zone. Precisely gold achieved 1785, tried to breach it but failing to do so. It is broken on the downside and closed at 1750 levels. Now, what to expect next week? Is this the reversal? Can we sell from here? Or is it going to rise again? We will try to find the answer to this question in this analysis. Those who are new to the channel must not forget to like, share, subscribe and comment, and must not forget to press the bell icon so that you can stay tuned with the daily updates for gold, which I share in fact twice in the day, once with the Asia session, next with the US cash session. Do watch that also. Let's start. Now see, last week we saw that gold has formed triple bottom here, and since then it has reversed. Also the rise was such a bigger one that a potential drop was expected. Despite it, the movement was sluggish in gold. It failed to show any movement, whether bullish or bearish. However, closed the week with a bearish note at around 1750 levels. Now if you see the charts here, you can find out, see, a retracement, drop, retracement, and now again trying to look downwards. You can find it is trying to create another formation of its own, and if you consider this as triple bottom, yes, this is a kind of a squeeze we are looking into. Possibly at the same time, one must not forget how it has behaved in the recent past. Now see, this was the previous consolidation zone, a rally, retracement, consolidation, double top, and then a sharp drop. Now if you see this, last week it has breached this channel and it has formed a high out there. So it is trying to change its movement. Previously was sharply bearish. Now it is trying to change the slope here. It is just trying to uh, be in the moderate bearish zone right now. Hence, only bullish confirmation for gold or only positional entry for gold is above 1800 levels. As we saw previously also, 1740, 1750, which was a stronger resistance earlier, as I have mentioned several times, is now going to be a stronger resistance on the strong support for the downside. So yes, if you see it trading below 1740 next week, potentially we can see a further drop below 1740. You can in fact expect it to come back till towards 1720, 1710 and 1700. The next milestone is towards 1700, 1691 zone. This is going to be the next support zone. So yes, below 1740 you can potentially enter into a sell and expect 1720, 1710, 1700, 1691. 1691 definitely is going to be a major support. This is one part to it. On the weekly charts, so a potential drop can be expected. Now let's have a look at the daily charts. On the daily chart, what we saw on the weekly charts is getting reflected here. Lower highs are getting formed, and yes, it is trying to reverse a bit. See, three candles in sync, but at the same time one must also observe that the size of the candles. Yes, if you consider the daily charts, potentially here is also a good support. So yes, if it breaches below 1740, the next destination should be somewhere here at 1720 and 1700. Very strong support, and then 1680 levels should come into picture. It can complete the journey. If it is bearish, it can potentially drop till there. Chances are less. Right now still you can consider this as retracement only. See, it has changed. This was the bullish channel in which it was trading, and now it has reversed from here. So this is a potential reversal, but at the same time should be considered only bearish if it breaks below 1740 levels. Till the time we have to be cautious there, as it can again try to rise from there. So this is one part. 1740 definitely coming out to be a good support level. On the downside, then 1720 and 1700 levels should be seen. Below 1700 a little more bearishness can be expected. So this is one part to it. On the daily charts, now let's have a look at the monthly candle. Now we have 8 trading sessions left for the month, and if you connect the dots for these 3 candles, you will find the highs are very well connected. See, if you just connect these 2 candles, you can find the highs are very well connected. It indicates that the bearishness is not yet over. Second thing, for the month it has taken so much rise that a little retracement on the downside can be expected. So first thing was, it has breached these 2 candles, the highs of these candles at around 1700, 1710. Now remember, we have 8 trading sessions left for the day, and the candle is so big that potentially, even if it has to rise for next month, if it has to remain bullish for next month, it may have to retrace a little on the downside, and hence in next 8 trading sessions there is a possibility that we can see gold again coming back to 1700. There is a high possibility for that. So keep that in mind, which also combines with our previous analysis that below 1740 a little drop can be expected. Also, one more observation on the daily charts. Now see, it has formed the highs here and it is trying to trade in this. Yes, you can buy it. If you see it trading above 1770 zone, you can buy again. You can buy gold if you see it trading above 1770 levels. Above that, you can expect 1780, 85, and then beyond that, we may see it hitting 1800 levels also. So, if it fails to drop below 1740, sustains above 1740 levels, and then tries to bounce back above 1770. So when you see it gold trading above 1770, you can go long again and you can expect that there is a potential rise which may try to take it till towards 1800 levels in the coming few days for the next 8 trading sessions in this month. That is another observation. So two observations are complete. Between 1740, below 1740 it's a sell, above 1770 it's a buy. There we have to observe how it behaves at 1740. Below that, certainly we can see it hitting 1720 and 1700 levels. In fact, 1691 and 1680 cannot be denied. On the upside, yes, above 1770, potentially we are looking at 1800, which is definitely going to be a very, very strong resistance at 1800, 1808 levels. So this is confirmed. Now let's have a look with the help of indicators. Now look at the indicators here on the daily. Now last week when I shared the analysis, I told very clearly that this is trading outside Bollinger Bands and hence a pullback is must. So if you, in fact, if you see it trading at 1780, 1800 zone, it may get a very strong pullback on the downside, and precisely it has tried to drop since then. Now also remember this fact, there is a good support here and hence I'll wait for this to break down. So this is one part to it. Now if you see on the daily charts, you'll find that 20 and 100 period moving average coming together here at 1700 1710 zone, which definitely is going to provide a very strong resistance for any further downside move for gold, and hence this is also now going to be a very important support. We will see how it behaves here and how it behaves in this zone. Very, very important. At the same time, now if you look at the directional movement, was so far bullish, it was extremely divergent, trying to converge here. The stochastic, which was overbought, we told very specifically that it is overbought and it must drop, and see precisely achieving the highs, it has taken a good dip. Now what to expect? Can we enter into can it enter into an oversold zone? Yes, there is a potential. It may try to bring it to an oversold zone till towards 1700 levels, 1720, 1700, and then possible a bounce back from there towards next month. Now look at the daily charts. There is a on MACD, and once MACD starts to converge, this also brings a potential for crossover for a sell here. We will wait and watch, which also indicates, because see this conversion is happening at a very high level, and which also indicates a potential crossover for sell off. So yes, you have to wait for it. Now can you see this time when the previous peak was there, it is precisely achieved close to same levels and converge crossover for a sell. Right now we are looking forward to same opportunity there, and whenever such conversion has been seen, a potential drop has been seen there. Hence a potential drop cannot be denied. The RSI, which was overbought, now looking downwards, indicating bearish. Now this is on the daily charts. Let's have a look at the weekly charts. On the weekly charts, see the 20 and 50 and 100 period weekly average is here lying at 1800, very, very strong resistance, and the 20 weeks average is at around 1700, 1720 zone. Now this zone probably can be a good resistance zone and a support zone as well. Hence a swing in 1700 to 1800 is something we should wait for it to break out of this zone. So wait for it to break out. Right now it appears 1710, 1700 should be a good support, 1800, 1808 should be a good resistance. Now see, on the weekly charts, it is on the verge of a bullish crossover after long period of time. It does not mean it has not yet crossed over, and hence it can again start to diverge from here. If it is bearish, there is a potential divergence which can be expected. At the same time, the stochastic is now entering into overbought levels. Potential always exists that it can try to do so, but see this time here it has achieved the peak and dropped from there. So likewise, see also if you see the closing was here and then it has crossed over. Likewise, if you see it has achieved these levels and potential crossover can be expected again. look at the peaks here, you can find out these are the highs which are done and potential drop cannot be denied. The MACD, this is one part to it, which is a bullish indication here on the charts, on the weekly charts specifically. If you see this, this crossover is happening at a bottom at an extreme low level. So two indications which are giving it a different meaning here. The crossover is happening at bottom, only two candles are done, and if it could have been such a case, then potential reversal could have been expected, but it is happening at bottom, indicates that we may see a little more bullishness to continue. This is one part which is making us say that there could be a potential bullishness which can be expected. Now you can see in the recent past for last 5 to 10 years, such low levels on stock MACD has never been seen in gold. It has always tried to sustain till towards this zone at minus 20, and yes, this was the time at around 2013 2015 when it has achieved further lows. So but that was a straight fall here, and hence also that was preceded with a strong rise. So we have to always see the highs and lows here. The highs and lows are almost done, plus 50, minus 50. Potentially now it is trying to come back to the equilibrium there. RSI is looking upwards, indicating bullishness. That is one part to it. We have to how it behaves. Now on the monthly chart. On the monthly chart, the 20 months average here, 50 months average here at 1650 levels, and it is trying to consolidate a bit in between this. Also the variance between the 50 and 100 period moving average is far beyond. The stochastic is trying to cross over. The stochastic is typically in the oversold zone till now. Looking forward to a bullish move from here. Let's see if it does give a bullish move this time. The MACD is trying to converge, though there is a potential for it to sell off further, but we'll wait. Right now it appears it may try to converge and remain in green this month. RSI trying to look upwards after a straight fall. Now it is trying to look upwards. So we have seen the charts and indicators. Time for us to define the strategy and levels for next week. Now let me give you the strategy and levels for next week. And before I proceed, yes, if you want to learn this art of trading profitably and identifying the right trades and the right entry points and the exit points and trade profitably, you can join my 17th mentorship batch, which starts on 28th of November. 10 days are left and only few seats are left, as only we conduct with very few seats. You can join this session and definitely begin your new year with a bang, with more confidence, right tools and right strategies to make profit. And that is why I say do not miss this opportunity. Join this mentorship batch and definitely you will profit. Also, you can be part of my signals group where you can trade just as per the signals and definitely you can profit. Reach out to me for more details. My Telegram ID and my email IDs where you can connect out to me are mentioned in the channel and video description. My channel, if you go to the channel homepage, you will find an About Channel tab, and in the description, you will find the contact details of Gmail ID and the Telegram ID to reach me out for. So do reach out for trading and training queries. Now let's have a look. And the upside, as we saw, you can buy at 1761, but then remember there are very nearby resistances 1765 and 1770 till 85. There are very nearby resistance 1770, which is this you should mark out for. 1770 should be a very good indication that it is trying to rise a little. Beyond 1770 we can expect 17. Yes, in fact, let me give you the levels which you can just directly book profits at. 1775, then 1780, and then 1785. See, gold is just trying to give you every $5 there is a little resistance. Now why I am giving very nearby levels? Because it is not to be considered as bullish till the time at least it trades 1770 or 1785 level. These levels you should mark out for. This is a breakout for this week. This is a double top level for this week, and potentially once it trades below 1785 directly it will hit 1800 this time. If and only if it breaks out beyond 1785, you can expect sooner or later, yes, it may retrace a little, but then it is going to hit 1800 levels and then 1808. Now remember this fact. On the monthly charts we saw this is going to be a very strong resistance zone. So what you need to do, then these zones you should definitely remember and you should take your trades accordingly. On the downside, where to sell? As we saw in the analysis, 1740. Only if you see it trading at 1740 and below, you can take a sell entry. The next direct target should be 1730, 1720, 1712 and 1700. Below that, 1691. Till here it's fine. Till 1680 is going to be a very important support zone. Hence, on the downside, now what you should take care of is the fact that 1720 major support, 1700 the next, and then 1680 levels should come into picture. On the downside, major support levels are at every $20 and till 1680 should not be considered as bearish. Below that, always we have seen that it is a potential to drop till towards 1610 levels, which we had seen earlier, 10, 15, 18 levels, and then below that it is going to remain bearish. But this, I don't expect this to happen in next 8 trading sessions for the month. This is just a retracement, should not be considered a reversal. Yes, a possible drop till towards 1700 cannot be denied, so take your trades accordingly. But yes, if you see it trading above 1770, you can potentially expect that it is going to hit 1800, 1810 zone at least, and a retracement from there cannot be denied. So take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Reach out to me for any of your trading or trading queries. Thank you very much. Have a great profitable trading week ahead. Thank you.